The revised exposure draft for insurance contract has a significant impact on long-term contracts, including many of the life insurance products issued in Canada. The proposals require an entity to measure life insurance contracts using a building blocks model, which comprises a current estimate of the present value of future cash flows, plus a separate risk adjustment and a contractual service margin. In addition to being a new balance sheet measurement model, this has significant impacts on the timing of revenue and profit recognition in the income statement. Instead of recognizing revenue when premiums are received, insurance revenue is recognized over the period that the insurance service is provided. In most cases, this will result in recognizing revenue much later than is currently done today. Another significant impact is where there are changes in assumptions relating to future service. For example, changes in mortality assumptions. These do not go immediately through the income statement as they do today. Instead, these are first adjusted against the carrying amount of the contractual service margin on the balance sheet. This could have significant impacts on the timing of profit recognition compared to what insurers are currently doing today. In addition, the proposed standard requires that any premium amounts received that would be repaid to the policyholder where the insured event does not occur, for example, any cash surrender value of the policyholder or endowment amount, is required to be excluded from revenue and claims in the income statement. This will typically result in a lower revenue number compared to today. For many life insurers, these proposals represent a significant change from the way the results are presented and understood today. The proposals could be fundamentally changing the timing of revenue recognition of the profit signature over the life of an insurer's long-term products. And depending on the composition of your invested asset portfolio, you may be subject to increased net income volatility from economic variables. A key question we hear from clients is, what should we do now? It's important for management to educate themselves and other stakeholders in order to understand the expected impact financially and from an infrastructure point of view. Core products can be modeled using the new methodology to understand the extent of any differences to revenue and profit recognition compared to today. Data and modeling systems will need to be assessed to determine the capability of the system's ability to track the numerous additional data points required by the new model. Company resources will also need to be reviewed to ensure the appropriate knowledge and experience is available to apply the new model and understand the results.